get the views from Chris Conway, Chief Market and Trading Strategist, Australian Stock Report, live for you from our Melbourne studios. Chris, welcome to the show. Going into this AGM, there'd been chatter around the REM report, maybe the strong likelihood of it being voted down. Are you any wiser on that development to emerge? Yes or no? Upheld or voted down?
Good afternoon, Carson. Look, I probably read the same news update that you did this morning, that there is a group within the shareholder base that wants to vote it down. I didn't understand or read any reasons as to why, and given the performance of the company, there's some questions as to why they would want to. I mean, you know, Nicholas Moore gets paid circa, $15, $20 million a year, but you've got a company that's performing exceptionally well. As the chief executive said in the presentation today, I think they've been 48 years, or since they were founded in 1969, where they've made profits every year. It's an enviable record. And you look at the way the business has developed even over the last 10 years, where capital markets used to be the big revenue generator, and now it's the Macquarie asset management and the infrastructure business that generates most of the revenue, and that's really been the engine room over the last 10 years for their profit growth. So, it's a great management team. They continually change and adapt their portfolio mix to get exceptional returns. So I don't know why you would want to vote against the remuneration package unless you don't like talented people being rewarded appropriately.
Well, beyond all of that, the notion of their expectations, which traditionally are modest, in order for them to vault over a low bar in relative terms, they are calling out full year numbers that are pretty much on last year. So where's the growth? And that's incidentally not how we smell Macquarie, but still moving on. Tell me, where is the growth on that metric itself on a full year basis? Hard to see much.
Yeah, look, it is hard to see much, and there was a Citi analyst not too long ago that put out a comprehensive report questioning the growth in the mirror business, so the infrastructure and real assets business, and that's because of increased competition. You look at BT and Magellan and companies like that competing in that space, driving up the prices for assets, and also a shift away from investors to more passive funds. So, yeah, there is a question mark over whether that profit engine, which has driven the company for the last 10 years, can be sustained and even grown upon. I think you'd have to lean against that being the case for the next 12 months. You've also got currency headwinds now with the Aussie dollar above 80 cents, although let's all just remember that the Aussie dollar has only broken higher out of its range, which it was in for most part of a year in the last 2 weeks. So let's not go giving that too much credence just yet.
Not only that, but I mean, they splash cashed in the UK, and that was, of course, a pound play, not a greenback story. So to the extent that this green bag that they bought off the British government, it was the first mainline asset sale under Theresa May. If you want to sort of be pinning your performance to that kind of a record, as an aside, but on that metric, if you look at TWI in terms of the performance of the local unit versus a basket of currencies, not just greenback, I mean, that would be a favourable move, surely, the continued weakness in sterling.
Yeah, and look, I don't think ultimately the company's going to rely on currency movements either way. I mean, they even said in the AGM today that it's outside of their control, so they probably won't try and control it. I think what you would pivot back to, at least for me anyway, is the track record of management. Again, it comes back to, as I was saying before, I'm sorry to labour the point, that 10 years ago, they invested heavily in assets, real assets and infrastructure. They are the world leader now in terms of both returns and inflows. Now, that business dynamic might be changing, but then you look at the management and say, well, if they were able to do it 10 years ago, I don't see any reason why they won't be able to do it again, and again, change their portfolio mix so they can generate growth in both revenue and profit. So that's what you're banking on here. You're banking on that team, and I think that's a fair bet. But just in terms of how you'd play this as a trader or an investor, I think as an investor, you just buy it pretty much at current prices, you put in the portfolio. If you're trading it, and I profess to be a trader rather than an investor, I would maybe wait for a little bit more of a pullback. And then look to buy it then and catch a bounce. Okay,
let's move sectors briefly. Just a view on Bluescope, which you've got your eyes peeled on. It's interesting because some of those input costs were painful. The likes of the coal story just 6 odd months ago. Have things eased off on that front, to the best of your knowledge?
Yeah, I think it has, but more so the opportunity, I think, with Bluescope is that they've spent the last 12, 18 months, 24 months even, restructuring that business, stripping costs out, And there's the potential that because of their sales volumes and their realised prices over the last 12 months, they'll beat their guidance that they provided their last update of $510 million. I wouldn't be surprised to see a number around 580, maybe even as high as 590, and that's why heading into reporting season I wouldn't mind taking a position in Bluescope. I don't think it reports until about the 21st of next month, so it's a bit later on in the reporting season. But yeah, like I said, they've done a mountain of work, and they'll catch the benefit of, as I said, better prices and high volumes.
Yeah, okay. And the other point, just to finally on that score, is you're not holding it right here, right now. Just explain the rationale of waiting for the report versus preempting it on the register.
Yeah, so I mean, look, it has had a pretty healthy pullback in the last couple of weeks. It's from about 1470 into 1340, I think it was, when I checked it earlier in the week. So you might actually use the opportunity now on the back of this pullback to nibble at it, and then, you know, accumulate into, you know, probably a couple of days before the announcement. But, you know, as I said, if they are going to beat by that amount that I suggested, 510 out to sort of 580, 590, well, it's one of those stocks that you might catch a 5 or 10% pop on the day. So there's probably no great reason to be holding it right now, other than the fact that, as I said, you have seen, seen a bit of a pullback over the last couple of weeks, which makes it a little bit more enticing.
Chris, thanking you for that. Have a great rest of your week. Chris Conway, Australian Stock Report, there live from our Melbourne studios into the Fortescue Q2 results.